Good time then to go across and to hunt for some perspective. Shankar Sharma of First Global joins in to talk about what the market looks like after this very smart 5 to 6 week rally. Shankar, morning. Thanks for joining in. How have you classified this 5-6 week rally? Do you think it's still a bear market rally and no more than that?
Well, I think the clue lies in the color of my tie. And the last time I was on, right, remember, I had a green tie on, and that was 9,500, and now we're at 11,000. So, it works. There is something quite interesting about this. So, I think, just let's put this whole rally in context of where this whole bear market has gone. And we should stop probably becoming surprised at the sort of quantum of the rally, especially in context of what happened last year, because last year, was a 60% down year for most markets, including India. And that was completely out of ordinary. I don't recall any market, since the time the census has been computed, when the market has been down 60% in a single calendar year. Peak to trough might have been that much, but not in the space of just 12 months. So, last year's rally was, the fall was huge. So in that context, at some point, we were set up for a rally also, which would be very strong, very robust, and, at least on the face of it, almost as if a bull market has come back. So what we got was, something which was probably on the cards anytime this year. And, I've said this many times that, there would be a very strong rally, whether it was this one or, maybe it would have happened in the third quarter of the calendar year. But, we were due. I still think that we are still very much in a bear market, and that this is a bear market rally. I see no evidence, whether fundamental or technical, to believe that the markets have changed completely for the better, and that the lows are firmly in place and they will never probably be revisited. I don't belong to that camp at all. And in my opinion, we are nearing the end of the global rally, which has been, of course, a lot less robust than India's rally. Globally, markets have been up between 18 and 20% on the average. India is up roughly twice that. I think the global rally is also, drawing to a close. And within that context, the markets that do the best usually hurt the most also when markets turn. Just as India was hurting the most, amongst the most, in January to early March, and therefore the rally in India was a lot more robust than what it was elsewhere. So I think markets are due. Markets probably have run the course of this bear market rally. I don't think we should expect, incrementally any more juice from this particular leg of the move. 35-40% rally in barely 20-25 trading sessions. I mean, that's more than what anybody could have asked for. It's quite another matter that I've met a lot of people in the last 4 weeks across the world, and almost nobody has actually come away really happy from this rally, and that is, quite another discussion. But, be that as it may, I think this rally is pretty much done.
Shankar, morning. It has also been opined that this is perhaps not a bear market rally, but the fresh beginnings of a bull market. How high or low a probability would you attach to that?
In my view, negligible probability of it being a bull market. In my view, very, very high probability of it being merely one of those rallies that we do keep seeing. The question I've been asked most often in the last 4 or 5 weeks' time is that, is this October 2002 or is it March, April 2003? And if you recall, we had a rally that began globally in October 2002, but that petered out by the end of the year, and the market went on to make fresh lows till March, April 2003, and that's when the big bull market began. Much as I would want to believe that it's March 2003 or even October 2002, my sense is that we are in neither. We are probably October 2001, when, if you recall, we had a very, very strong rally pretty much across the world, but particularly in the US, post 9/11, and markets went up, a good 30-40%, and stocks, virtually doubled. I still think that we are in October 2001 rather than October 2002 or March 2003. This bear market has still not worked its way out. And, it's a little bit too presumptuous to say that, within 12 months, a problem of this magnitude, a 12-month bear market, is enough to sort of, for us to have suffered, and, the suffering is behind us. Because just look at what the so-called green shoots were. Good banking results, as it all turned out, they're all, sham results with complete accounting manipulation. The so-called green shoots of a little bit of housing recovery here or there. I mean, those things, if you think about it, data points will not universally and linearly keep going down. At some point, you just as stock prices do technical bounces for no good reason, other than the fact that they've fallen a lot. So do economic indicators. Nothing will just go down in a straight line and go to zero. So people, when they start clutching at the straws by saying that, look, the second derivative of a fall has kind of turned positive, that the rate of decline has actually slowed down, then you start to wonder that, are we just now really, in a complete hopeful frame of mind that, things are just kind of slowing down in terms of how bad they can get. You look at Eurozone data. I mean, German industrial production falls 20%. External trade data for almost all countries continues to be really, really bad. The only country doing well on that front is the US, wherein the current account is, shrinking quite rapidly. But that's not good news for the rest of the world. I don't think the green shoots were really green shoots. I mean, they were more like green weeds. And, as we saw in the 1930s as well, data is never linearly bad. You just do see technical bounces even in data points. I suspect that's pretty much, what happened in the last 4 weeks' time.
Do you think there's another leg down in the market, Shankar, which will be precipitated by any fresh incremental bad news? Or do you think ordinary turn of earnings, etc., can lead the market down to retest their old lows?
It's if you're talking global markets, I just think, the bank stress test, incremental capital injections, a lot of things are still out there which we don't know how bad things can actually be. And, that's what I was looking at, Wachovia results. You have a 16 billion loss in, Q4 of last year. Turn that miraculously into a small profit of $1 billion or $2 billion. Those things will not make the markets go, higher or make the markets look better or feel more relaxed. I think there is more bad news, on the banking front. IMF's estimate of toxic assets has now gone up to $4 trillion. That's roughly 3 times up. Of course, they're now including, other parts of the world like Eurozone. So I think banking write-offs by no means are done, which means, you have further incremental bad news coming from more write-downs. Plus, you have, when banks go out and raise more capital, that further, pressures stock prices. Closer home to India, I think the real problem is still that, just look at it this way. We've had actually pretty bad data in India. Industrial production was very, very weak, just in the last 4 or 5 weeks' time. RBI comes out in April itself, which is the first month of the financial year, and downgrades estimates for the entire year, FY10. That's very, very interesting. That so early in the year, the estimates already being revised downwards. IMF's estimates, of course, are a lot lower than even RBI's estimates at 4.5% GDP growth for FY10 for India. I think what might drive markets down, as far as India is concerned, will be poor trade data, because I think that the external front will be under a lot of pressure because of the fact that the US is contracting very rapidly in its desire to take goods and services from the rest of the world. So that can be a serious problem. And of course, industrial production, Brazil's industrial production is down into double digits. So, India at -1% or there it is, there is still, you can't say that the worst is over even on the IIP front.